We couldn't wait any longer with sharing quite a few exciting updates actually with all of you. It's absolutely great to be back here. First community AMA of 2024, which is set up to become one of the biggest years probably for Propchain as an ecosystem, as well as the underlying business verticals that we're looking at, like Prop.com, like the home ownership accelerator that we're looking to enter into the market, as well as the wide variety of products and solutions that we are developing currently under Propchain, where today we'll be shining a lot more light on all of these topics. It's a general ask me anything today as well. We are open for questions, and as you are used to from us, you can utilize the Q&A box in order to push out your questions, after which I will try to answer as many of them as possible at the end of the presentation here. So feel free to send them in the Q&A box whenever something pops up. So for today, we have prepared a little presentation, which I will be sharing with you guys. It looks like it is visible for everyone. So this is what we will be using today. Bit in the newer style. Unfortunately, today I haven't been able to make it to the studio, but the next community AMA and the DVM AMAs will take place there, because we have done a lot of great upgrades. And also the style that we're maintaining today is the style of what is set to become the general foundation for the digital board meeting related presentation, so that also there you get a bit more understanding of what is lining up, and the way how we like to communicate in all openness about the experiences that we take, the lessons that we learn from actually developing on the Propchain ecosystem, as well as launching the underlying business verticals and running those, because obviously this is quite an operation on its own as well. And in today's presentation, we're going to run over quite a few topics, actually. We're going to run over the Prop.com launch review and the direction. We're going to run over tokenomics. We're going to run over past achievements, over outlooks, and over pretty much everything that is related to the past few months of progress and the next few months ahead. Because I think that we have seen some questions coming in. It was obviously a bit quiet during Q4, especially the end of Q4, mainly with the reason that we had been absolutely strangled in the actual launch of the underlying product Prop.com. And I think it's great that today we can take a moment to look back at it and experience or share the experiences that we took. So a general update today on Propchain and Prop.com. So to start that today, we would like to tap right into the Prop.com launch review and the general direction of where we're heading. And there's quite a few topics to cover here. But probably the most important one to start off with today is hurdles. Because we have faced a few, I think that we can be fully open about it, as with every product launch, as with every launch that we have did in the past up till now. We have always seen hurdles. And I think it's natural for every founder, for every tech project, for every startup. You always find yourself in a place where things don't go as they were planned, or certain unexpected, unplannable hurdles pop up that delay you in your progress, delay you in your deliverables, your deadlines, and so forth. So for us, I think that there were 5 major hurdles that we have seen in the launch of Prop.com as a digital investment, real estate investment platform. The first one was definitely one that is experienced by many people, actually, which were the local banking issues that customers faced. We have seen countless of examples where people try to deposit money in their local IBANs that we have created for them on the Prop.com app. And we have seen in many instances that they were called by their banks and that they were warned for fraud, that transactions were blocked, and that simply said the banks were playing banks again, and being extremely harsh to to a certain extent, even slandering the actual product that we have launched here, that is fully compliant and where all of our service providers are regulated to the T to offer the services that they offer. So this was one big hurdle we faced, especially in the first weeks, where we really noticed that this was blocking out a lot of volume out of the platform, a lot of deposit volume. Eventually, we have been able to reach out and to speak with several banks. We have spoken with Rabobank, we've spoken with ABN, we've spoken with a lot of customers that have pushed in messages towards their bank. And eventually, we have been able to solve quite a few of those issues. We have also been warning these compliance departments that it's okay to warn your customers, but it's definitely not okay to push regulated platforms and regulated service providers in a position of being fraudulent or whatever. So we have made our warnings there, and to some extent, I think this has been picked up quite efficiently. And slowly but gradually, we see this issue occur a lot less, which is obviously very important to us, considering our product roadmap, where having the banking integrations within the mobile application is a very important element. I mean, having your own IBAN, being able in the future to utilize a wide offering of banking related services within the mobile application. We obviously need to have the foundation work like a charm. So for us, this was a really important issue to solve. Furthermore, we saw quite a few issues with 2FA. So the authentication on the platform. We have seen people with problems in terms of the 2FA simply not working. We have seen people with problems of not receiving the codes. So this was an issue that we needed to solve because obviously it blocks out users from the mobile application, which is probably even worse than not being able to deposit into it because you can simply not even experience it properly. So this was a core issue to solve. I think we have solved it for pretty much everyone at this point in time. Several visual bugs and inaccuracies. I think that this is a quite natural thing that happens. We have seen many. We have seen return figures not being displayed well in the app. We have seen points and comma issues. We have seen simple representations of numbers, sizing issues, you name it. This is generally speaking the stuff that you get into when you launch things into the public and it's being adopted by a wider user base. And I think that was also one of the core purposes of being in the position to do a soft launch and to actually extract all of this information in order to get us to a point where we kind of filter out the basic bugs, the basic problems that are in there, to then further scale up our commercial efforts and to work towards the actual hard launch of the mobile application, which is something where I would like to thank everyone for his valuable input, in case you're here, in case you're watching. And we definitely should keep this coming because it's a vital element eventually of building a mobile application and launching it into the marketplace. So I think another common hurdle that we have seen in the launch phase was the app freezes and crashes. We have seen a few of them. It was interesting to see it over the multitude of different devices. So this was something that we have been able to solve duly as well. Customer success hasn't been provided with many more tickets related to that problem afterwards. So that was great to solve as well. And I think also some issues in the investment flow. So mainly related to roundups of numbers, which we have seen. So this was something that we needed to solve as well in order to display the correct information. So all in all, we have lost some time there. Obviously, we have been working on it for several weeks. I think that we can safely say that it took us around 3 weeks to get to a stage where it was quite quiet actually on the customer success department. So this has been a core focus. And it has also been a reason why we have said we're going to delay or extend the escrow period for the listing on the platform with another 30 days, where we have been loyal to our initial adoption crowd and community, and where we have put them in a position that the first month of rental income will actually be doubled by us as a compensation for the extension. because simply this was focused on the tech side. It wasn't necessarily focused on the commercial side. In fact, we didn't do pretty much anything on the commercial side in the first 3 weeks, because we first really wanted to see what happens when you push this into the marketplace and collect all that valuable data that we essentially need in order to get it to a point where we can actually commence with the commercial operation. If we translate that in the product updates, then I think that we have a list of 6 major updates that we have pushed through. First of all, the forced updates integration. This was something that wasn't there previously, so that meant that every user needed to update his mobile application manually, which is obviously causing constraints when you're constantly releasing a new version of the product, especially in the early stages of a launch, where you eventually would like to have it out there constantly to test and see if things are fixed or see if things need to pivot into a different direction. Furthermore, we have integrated Stripe. Really happy with that. It solved also a couple issues, obviously, for the people that weren't confident to do the bank deposits. Was really nice because for Dutch users, which is still obviously a big portion of our user base, but also of our wait list and the initial community, ideal payments have been made accessible, and we have been receiving very positive feedback on that as well, which is absolutely great, because this is definitely going to set us up strong for the commercial efforts that we're looking to push into the actual Dutch audiences and the Dutch market. Furthermore, we've done the visual improvements as per the hurdles that we run into. We have been doing a lot of visual improvements, and I'm actually able to sneak peek or sneak you all a few of the new product user interface screens, which are being implemented over the course of this quarter. So that comes further in to this presentation. And furthermore, we have obviously been doing a lot of bug fixing. Everything that lands in our customer success department is then either escalated to tech or product if required. And this has all been fixed as per such. So that brings us to the multi-device stability optimization as per the app freezes and the crashes that we noticed. Has been a major point of focus for us to get that up and running and stable. And furthermore, we have been working a lot on the admin portal. So really on the back end, which has been based on a lot of internal discussion. We have been running a lot of that back end manually for a long time. Right now, obviously, with the upcoming on-chain deployment and so forth, the back end has been pretty much signed off in terms of functionality, which involves obviously compliance, regulatory data, commercial data, product feedback data. So there's a lot of stuff and work that goes into that backend. The reason why we have chosen not to build that previously is mainly because of the fact that we would like to keep it lean until we reach the point of soft launching and actually retrieving user feedback. So this was really a key moment for us and a key lesson to learn before starting on the admin portal. Excuse the coughing, guys. Lessons learned, very important, probably the most important. Always launch early. It's really something that we have learned from the trajectory of building Prop.com, building the mobile application, and being out there now, actually talking with users, what they want, what they like, what they don't like, what goes wrong. Never think you know it all. I think that a common problem for founders, especially in the tech space and especially in spaces where things being disrupted, where a whole lot of stuff is based on assumptions. You should never think that you know it all. You should never extend like your product launches, and you should just go out there without trying to over optimize, without underlying data. And that brings me also to the third point, which is really data driven decision making. So much of your product creation is based on assumptions in terms of disruption in an industry. And that is something that can really become a very dangerous kind of silent killer in the room and can really burn you through a lot of resources, both human, financial, informational, a lot of analysis paralysis that can basically make its way up into your teams So data-driven decision making is really something that we have learned from these past 2 years of building and launching and doing MVP launches and collecting essential feedback that you need in order to create a solidified product that can actually function on its own feet and stand on its own feet and can generate revenue, because that's eventually where it's all about. Furthermore, I think we have learned a lot as per this story, as per this point, in terms of the internal operation. We have really been taking tons of lessons internally on how to structure communication, how to assess risks, how to assess dependency. And this is something that I really want to emphasize in today's presentation, because not too many people understand what it actually takes as a team working with that pressure, having different departments that all need to deliver at the exact same moment in order to not run yourself into dependency risks, having people that come, having people that go, having an extremely scaling operation in terms of human resources. We have over 14 different cultures within our organization as well, that all have different values that you need to set to your values of your company. It's definitely not something that is done so easily as many people think. And that's a big lesson that we took from this as well. A very big lesson that we took from there too is that the decisions that we made to really filter out noise in our process, like, for example, a community chat that we had, certain feedback mechanisms that weren't as valuable, it has really brought us places, because ultra focus, like laser focus, is really needed when trying to do these things and when hitting your deadlines. Eventually, as a startup, you're playing a game against all odds. The chances of a startup succeeding are extremely low. If you look at the current market conditions in terms of funding and these kind of things, it became an extremely hard environment. So each and every day that you can survive and that you can extend your runway into the future, you're basically enhancing your probabilities of winning that bet and winning that gamble. And that's something that we have really learned internally in terms of optimization, in terms of decision making. Everything needs to happen at rapid speed. There's absolutely no time for slacking. There's absolutely no time for wasting time or resources, because it dramatically lowers your probability of succeeding, which is already extremely low. So that's something that we have really learned. At the same time, it also made us very confident, because I think that we have passed some very critical stages in today's startup environment. For example, the 1 year survival or the 1 year anniversary, the 2nd year anniversary. This year, we're approaching the 3rd year anniversary, actually, in the trajectory of building Prop.com, at least the vertical, and also Propchain as a whole. But I think the core focus has obviously always been here until like mid last year. So with that being said, I think that it really made us confident that we can make this work. It also really made us confident about the people that we have. And it also really, really made us confident about the community that we have, that is really backing us ever since, that has shown us initial interest, early adoption, 8-9 months ago. So there's a huge win that we have taken from the operation so far. Feedback mechanism is the next point. I think that feedback is becoming ever increasingly important where we are today. Not only with the products that we built, like Prop.com, like the home ownership accelerator that is upcoming, but also with the actual ecosystem, where we go, what the direction is, and more about that will become clear at the end of the presentation. But feedback from you guys is important. Don't keep it for yourself. Don't be afraid that we are not taking your feedback well. Whatever is on your mind, share it with us. We have the duty to deliver, but you guys have the duty to chat with us, to show us what you think, not to chat or chit chat like a few little girls in a toilet about each other gossiping. No, speak it out, throw it in our faces, because that's the only way how we can grow and how we can actually build products that are adopted by the market space. To make this even easier, I've created an anonymous feedback mechanism that I will be sharing in the announcements channel with you guys shortly. And please make use of that. Please actually make use of that, because this is where we thrive on now as a company. And the goal of that, obviously, the goals that we attach to this particular effort is that we like to grow. We need that information, because otherwise we go right back into the lessons that we learned. I think that you never know it all, and the data decision or the data-driven decision making is something that comes back to this. So references, I think it's always something interesting to have also references to feedback that we get. So sharing with you guys what we have been changing, what we have been building based on the feedback is something that should encourage and accelerate the flywheel of collecting feedback, because it shows the community that it is actually being taken seriously and it's done. So this is something that I would like to invite you all for. On-chain deployment then, because that's the follow-up of the soft launch, and it's actually a part of the soft launch, because right now we are off-chain, obviously, for the reasons of building the front ends of the product, preparing our internal operations, making sure that the actual user journey is optimized based on actual underlying data, so that we can move into the next stage, which is deploying this whole infrastructure on-chain, because that's obviously a portion of the value proposition, or a big portion of the value proposition. This has a strong regulatory connection at this point. The reason for that being is that we have found ourselves on grounds of being exempted in Europe. So being able right now to do so, showing, creating, building on a case study that we can also show to European regulators, as well as our efforts now in the UAE, where we are actually in the middle of the licensing process by the Dubai Financial Services Authority, where we are trying, obviously, to become the first regulated on-chain crowdfunding platform provider. Crowdfunding is obviously a portion of what we're doing. I mean, it's the term crowdfunding merely where this activity falls under, but doing that on-chain and then being able to build on that technology suite is obviously where we're heading. So the roadmap for that is that currently we are rerunning a full analysis of the smart contract infrastructure that was built. We have done that. I mean, this has been ready for over a year from the top of my head. We will share these audit reports with you guys as well, so you can actually see when this was built. But the roadmap now is that we are kind of revamping that, seeing what is still relevant, where are the changes, where do regulators need to get a better understanding of that infrastructure, and where do we need to make changes so that we stay compliant, also in a fully regulated environment compared to an exempted environment. So this is ongoing. And from there, hopefully by end of Q1, we are having the first pilot on-chain, first listing on-chain live as well, which would kind of bring us ahead a bit, as it was planned for half one of 2024. But right now we're trying to shift that closer, considering the progress that we will make here with the UAE regulators. The Propchain integration, another very interesting topic, I believe. A topic where many have been waiting for. We have been sharing this with the digital board as well. It's also a follow-up actually on a soft launch. So right now we have officially commenced with the kickoff of the Propchain token integration as per the basis of a loyalty program, which kind of sets you up for increased returns. It's something that is quite comparable, so to say, as with Crypto.com and their card tier program, which is for us the most low-hanging fruit incentive to create around the Propchain token when it comes to the first product integration. Obviously later that will build itself out, considering the on-chain deployment, considering running on our own infra. So a lot more is coming. At the same time, right now, this is obviously merely based on creating that initial link and then creating that initial uncorrelated nature of having that token integrate into a product vertical that actually sets you up for a long-term commitment in the native utility token Propchain, meaning that if we compare it to whatever altcoin that doesn't have a long-term non-crypto related purpose, you will automatically create a state of being more or maybe even totally uncorrelated to the general crypto market sentiment, which is great if we can build that out over time. If you have any questions about that, feel free to drop them in the Q&A box in case that wasn't clear enough. And then what's next? What's next for Prop.com? First of all, the regulatory efforts. We keep on building on our relationship with regulators and finding the sandboxes, finding the opportunities, explaining merely what this tech can do, how we built it, how we, most importantly, plan to stay compliant in the environment that we see now, which is opening up. Actually, we see bigger institutions joining, we see regulators taking a different approach, and tokenization really seemed to be taking the traction that we have been waiting for such a long time. We're looking at the past 5-6 years that we have been monitoring this space actively, where so many tries were actually done in the market, and it constantly didn't pick up. But now that all of the big institutions jump in, governments jump in, it actually goes into the right direction, and we're very proud to be amongst the quite low number of firms that is actually working on these technological infrastructures. So really, really happy that this is going into the right direction. Furthermore, we have officially kickstarted the equity round, equity seed round of Prop.com. Further in this presentation, I will shine a bit more light on that, what we're doing there, and what the actual purpose of that is. And now, actually, with the first bits and pieces filtered out in terms of the product updates, we have officially started our commercial efforts. So our digital advertising strategies, the actual waitlist outreaches and nurturing, and onboarding, obviously, the offline marketing. So a whole lot is coming into play, and we're very excited to finally reach this stage, because that's obviously where things become interesting. That's where you start building up the actual models that work in terms of commercial efforts. And that's how we grow as a company and as a platform as well. Guys, excuse me for 10 seconds. I really need to blast on the AC here. And that brings us to the next portion of this presentation, which is the actual improved product design. It's something that I wanted to share with you guys. I wanted to give you all a little sneak peek of what our product department has been able to craft in terms of the improved user interfaces, user experience as well, as per the feedback that we received. So this is really where we directly try to absorb feedback that we get and then process it in the product. We have made it a lot more readable, I would say. I think it's a lot easier to use as per the efforts that we have pushed into product design. And I think that here you can see a few new screens. So the dashboard screen, for the ones that didn't download the app yet, please do so, because you guys are also a vital element of bringing this to the market. I hear a lot of people always scream, okay, when marketing, when products, blah, 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 then the products are there and they're not acting. So this is me calling you guys out to get there, to actually use the product, and then to actually distribute the message across, either to us in case things don't work out for you or things are unclear, so that we can optimize our product offering, or to the general public so that we can grow together, because it's eventually an effort that is merely on our backs, but also on the backs of our community. A good example there is that we are introducing the digital real estate broker program, which is actually an affiliate program also for bringing people to the app. And then I believe we have a very good chance of growing this together, also organically, because this is definitely an important part of our commercial strategy as well. One thing is to spend on user acquisition. Another thing is to leverage on existing community, which is even more important in my opinion. The marketplace, also a lot of improvements there, in our opinion, a lot more clear. Again, here, we will also launch a feedback loop the moment it becomes relevant. And then the wallet now also with the new deposit methods that are in. So here we have a little sneak peek. That brings us to the Prop.com 5-year strategy. And this is quite an interesting one. This is actually a slide out of the current deck that is being used in our seed round efforts. The conversations that we have with venture capital firms, the conversations that we have with large-scale individual investors, but also the deck that we have shared, for example, with the digital board members. So the digital board members got the opportunity to take a seat in the seed round and the equity seed round. And that's actually going really well. We're, I think, now over 70% that actually has signed their formal commitments. So that's really nice. We're raising $3 million in total, whereas $1 million is allocated to the digital board. So this is going really well. What is being done and what is the strategy here around Prop.com? Just to give you a very quick rundown of what the general topics are, how we're looking to fund these efforts, and what are the goals in terms of the product and where we want to end up. Next to the fact that obviously it is also great to shine a bit of light on what you guys can expect here. Let me state a few things. If you're looking right now at the financial targets, the total volume on the platform, the revenue that we're making, that's solely based on the current product offering that we have. So the revenue models that are related and linked to the current platform, which means like the onboarding fee, administration fees, secondary market fees, offboarding fees. That's kind of where this is all about right now. And which is already presenting us a very interesting growth curve and revenue curve. 2023, that was obviously the year of products and compliance. We have created the SAFE investment structure, which is basically a short explanation here. It's what you're used to from the soft structure that you had if you were a pre-sale buyer in the Propchain token. This is a similar structure, simple agreement for future equity. That means that right now you're buying yourself a ticket into the Series A funding based on a 20% discount on the then leading valuation. That means that we give the company the opportunity to build a solidified valuation. And at the same time, we have every person that is locking himself in right now taking the opportunity to buy at a 20% discount on that valuation at that time, which is a great little upside there. So what did we do? We fully developed and tested a functioning platform. We became compliant for EU offerings, and we are currently in the process of obtaining a UAE license. And we have launched our mobile application. We have done $1.64 million in total value locked. And we have locked in direct revenue somewhere in the range of 50K, which is great because it shows early revenue, and also towards investors. That's obviously one of the leading indicators to determine if an investment makes sense. For 2024, the main purpose, the main goal that we have is the creation of liquidity. From an investment perspective, we're raising $3 million in seed capital that is based on a safe structure in ADGM, which is Abu Dhabi. And we have the target to end up at a $21.8 million total value on the platform by the end of 2024. This is including the TVL from 2023. It's also including the estimate of capital appreciation in the kind of lowest estimate. We are planning to make around 700K in revenue this year in 2024. For 2024 and 2025, we will be, as per those targets and as per not integrating any other products or revenue streams, losing money. Afterwards, we will become profitable in 2026. That's now the target for the Prop.com 5-year strategy. What is on the product roadmap for 2024? The loyalty programs, crypto payments, the secondary market, instant liquidity on the real estate, debit cards so you can lend money against your tokenized assets and spend it, AI robo-advisory, coverage in the European Economic Area as well as the UAE, and an affiliate program. This is our primary focus for this year when it comes to the Prop.com app. From there, we turn into 2025, which is the scaling phase, looking to raise $10 million, which will be based on preferred investor outreach, and which is used for the establishment of the market position with the products that we have then built. During 2025, we're looking to reach a 54.5 million total platform volume with $1.23 million in revenue. Looking to build further on the basic banking offering, the auto reinvest options, the FX protection for the different jurisdictions that will invest in a multitude of currencies, the child and pension accounts, the expansion to the US and the APAC region, and a pilot in India with this particular product. For the US and APAC, I think it's going to be a pilot-alike structure as well, because there's a lot to find out in order to get this solidified. In 2026 then, we're looking to make quite an aggressive growth. As you can see, we're looking to up our platform volume from 54 million to 272.5 million. That's mainly being done by the fact that we can start offering pension products and child savings accounts, which is generally in the comparable companies that we have looked at, a massive driver for growth, and is definitely solidifying these kind of growth targets, where we're looking to scale to $8.5 million worth of revenue. So 590% growth, also turning us profitable. Yet at the same time, we're still looking to do a 20 million raise, either through Series B or at that point, maybe on the basis of debt. It's something that we need to consider at that point. The goals that we have, create B2B2C, meaning that we provide white labels that can be utilized, but that will still take the real estate volumes on our platform. We're looking to do mergers and acquisitions of competitors, smaller platforms, platforms that maybe are even bigger than us, but by the fact that we have many more products, sometimes these moves make a lot of sense because the user bases can then directly be monetized by the product offering that we have. Furthermore, we look at to have an established EU, UAE, and India coverage at that point, and we're looking to have our further US establishment being done where possible. 27 then, it's the super app stage. There we're looking also to prepare ourselves for an IPO or an exit opportunity to a bank or whatever is applicable at that point. And this could also potentially set us up to that unicorn stage somewhere in 2028, which is fully dependent on the revenue. Obviously, at that point, we see quite high valuation multiples of around 13 to 15x on the EBITDA currently in similar platforms. So if we manage to build the rest of our product offering well, and the revenue models well, it could be that in 2027 we hit a unicorn valuation. That's at least the target. An advanced banking offering at that point, facilitating tier 1 banking services, not necessarily a tier 1 banking license, as we believe that service providers can set us up for a very agile operation. Scaling of the business, so further scaling of the general customer base and portfolio, and investing heavily in efficiencies and optimization by automation, for example, to make that next leap into the 1 billion plus volume on the platform. Looking at 24 and a half bit more in revenue in terms of millions, and then 2028 is where we're looking to cross and double up once more on the total volume on our platform, where we're looking to be at $1.64 billion on the platform, with 42, nearly 43 million in revenue based on just what we have today. So that's probably going to exceed over 100 million revenue easily in terms of that volume. This is quite conservative, although it looks very big. Looking at big platforms like Wealthfront, like Betterment, like all of these kind of digital investment platforms, we have seen way more aggressive numbers that have been achieved. We have seen 600% year on year, 1000% year on year, crossing 1 billion in the second year. It's pretty crazy actually how quick these platforms have been able to grow. But we keep it conservative, and we think we have a really well achievable roadmap here. So this gives you a lot of perspective, I think, guys, on what is due in terms of strategy for Prop.com as the app. More about this will be shared. There's a lot of content being prepared around this particular topic, but just to give you a short sneak peek in where we're heading. Tokenomics update then. Past efforts. So what have we done to further optimize the tokenomics? Let me first state that I believe that now being like 8 months in the marketplace, approximately, where we are today in terms of tokenomics, in terms of circulating supply, in terms of the commitment, and in terms of the loyalty that we have seen from the community, I think we can be very proud. I haven't seen much around in terms of this level of community trust, this level of holder trust. At the same time, I do believe that our circulating supply could be higher at this point, or it would benefit the project well if the circulating supply percentage at least was higher compared to the total. And based on that, we obviously have been making efforts as a project or as a team, basically. We have done project-based burns. Till date, we have burned over 50 million tokens, reducing the total supply to 85 million approximately at this present point in time. So I think that shows a massive commitment from our end, especially looking at today's market price. Yet at the same time, we have been thinking, okay, how can we bring up that, what is it, around 12% circulating today to around 20 to 30. I strongly believe, and so a lot of people around me as well, that for the age of the project now, the stage where we are in terms of investing and where we're heading now in terms of 2024 and the unlocks, it will be healthy to be around that range, around 20 to 30%. And in order to do so, we have run a simple poll, which was a community feedback poll where we asked, would you actually use a rational burning mechanism for your vested tokens if we were to introduce one? And it was actually well received. 51% said yes. And this is fully on the basis of no information about what that would potentially entail. What it actually would entail is that a rational burn could mean that we would look at burning further vested tokens out of the pre-sale community. Meaning that if a pre-saler commits to burn, let's say, 1,000 tokens, we will then rationally burn, let's say, 4,000 or 5,000 tokens on our end in the vested buckets. So that the actual pre-sale holder is not being affected in terms of the percentage that that person holds on the total supply. This is something that is really psychological because people are now very addicted to opening their dashboard and then seeing a value of their still vested bag. But that's obviously a guess. It's a guess. It's a gamble that these things remain in that value. It's a gamble that it's an assumption, basically, that these things will remain the price that they have today or tomorrow or the day after over the period of 2 years. Obviously, we do all in our capability to create a sustainable ecosystem. But actually doing it in that way, after showing our incentive, after showing our commitment, we believe that it is not on us to keep on doing so because it doesn't solve the fundamental problem as what people call a problem, because I think that it's something where people may be scared about or uncertain about. So the only way to kind of solve that is by making a commitment as a pre-saler as well, because we have a very concrete plan for what we're planning to do in terms of token absorption, token integration, and so forth. And by the project-based burns that we have done now, we believe that we have done a fair bit and that the majority of what is there left in our control and the strong vesting that we have on those buckets is something that is perfectly manageable. Where it is less manageable for us is obviously in the decision making that people from pre-sale actually perform or do. So this is where we came up with the collective burn incentive, where we would be willing to make further commitments, but where the community would need to participate in there as well. The desired outcome from that is to create a higher circulating supply percentage by reducing the number of total tokens that are out there from a vested perspective. This gives us a similar market cap to where we are today. It doesn't change our market cap. It doesn't higher our market cap, meaning that we still remain a low cap. And it builds for longevity and sustainability of the product and the project, as per the fact that there's less future pressure on the market, which is a great achievement. And for every well-thinking person that holds tokens out of pre-sale, you should understand that by doing so, you are providing yourself with a similar situation. You still control the similar percentage of tokens that is unchanged, but at the same time, you're setting your future success up in a way stronger manner, meaning that what you see on your dashboard has a way higher chance of becoming reality eventually. So I think that is a really important thing to understand here about what we're trying to do, what we're trying to bring. I mean, this is obviously based on a vote. This should be based on a community-based vote, and it's eventually you guys that should make the decision there. It's not on us. We can just help out to jump on the feedback that we receive from the community, to jump on those concerns. And we can be out there supporting that and at the same time providing a lot of clarity on how we plan to manage our part of the equation. Because on our end, it is obviously managed by launching tech, by integrating the tokens, and by making sure that there's a sustainable business model that is created as per such. The further integration then of the token is a really important topic to cover, which is the prop.com integration that we have spoken about earlier. At the same time, it's also the ecosystem level where the token is being integrated. That is on the tech side, that is on the further product side. A lot of this information will be distributed with you all by the upcoming light paper on the ecosystem that will be available shortly. So I cannot spoil too much, but this will give you a lot of clarity on how we are planning to take care of our side of the token topic. Furthermore, it will also be integrated in the home ownership accelerator. A little bit more about that in a second. And then staking and LP was a different poll that we run as well. Would higher staking rewards persuade you to stake your unlocked tokens? A lot of people obviously said yes there. We have been rethinking the staking mechanics, and we'll be very soon launch a poll, a general community poll where you can all vote on the new proposal that we have around staking. Still, staking is well adopted. We have created a few good deals as well with some of the lead holders and the bigger wallets, and we will see some fire and some fireworks there. But at the same time, I think it's very important still that you all show us what is actually desired for you guys, and then actually make use of it as well, because that's where it's all about. Liquidity mining is also something that is being introduced now, upping the strength of the liquidity, especially on the decentralized exchange. So this is presented shortly too. Then a bit more light on the second business vertical that we're building under Propchain, because we have been sneaking it quite a few times, but I think it's great that you get a better understanding of what we're actually building and what is the opportunity here, where we're working on. So first of all, a few layers in the home ownership accelerator. Propchain obviously building the technology, the solution, the home ownership accelerator itself, and the stakeholders in the home ownership accelerator ecosystem, so to say. It's actually a sub-ecosystem, I would say, of Propchain itself. First of all, what is it? We all know these days it becomes increasingly difficult to acquire yourself your primary residence, your primary home. And it has a few, that actually has a few causes. First of all, the real estate market that has been absolutely blasting through the roof, pretty much everywhere around the globe. Interest rates that have gone absolutely through the roof, which makes it more difficult, but also less attractive to obtain yourself a mortgage right now. Furthermore, everything became more expensive. We have seen quite a bit of hyperinflation, so to say, over the past years, which made it more difficult to save up for a house. Things became more expensive. Living in general became more expensive. So people have less money. There's less disposable income that can be used for saving up for a house or basically paying off a mortgage, for example, which is obviously a bit of the chicken and the egg story. But and furthermore, I think also what we have seen is that especially younger people have been largely dependent on what they like to call the papa and mama bank, right? In order to get down payments financed for mortgages and so forth. Because being in a position where you're classified or approved for a mortgage, it doesn't necessarily bring you in the position to take that mortgage and make a 20% down payment or 15% down payment. And here we go. So we came up with something that is a widely popular concept in the US, which is called rent to own, where basically people can acquire their house and then at the same time, every month when they make a rental payment, they can basically reserve a portion of that rental payment that then builds up as a savings towards their actual mortgage down payment further down the line. So that's like the traditional concept of rent to own. And there's actually a few stakeholders. There's obviously the aspiring homeowners, like the ones that want to actually acquire a home, but that simply can't because they don't classify for a mortgage, for example. There's the mortgage provider or the mortgage broker, which generally leads you to a bank that provides you with the mortgage. There's credit bureaus that obviously register your credit score, and many people also don't classify for mortgages because, for example, they fall short on the credit score, or they enter a country like here in the UAE where their credit score hasn't been established yet, simply because they are an expat, right? And then you have the government, so the land registries and so forth. So basically, we have two directions of the solution that we're building here. So we have people that don't classify for a mortgage yet. They will generally land on the traditional rent to own, and we have people that classify for a mortgage, but who don't have the funds available to make a down payment, and are largely dependent on family, friends, or whatever. So first of all, that first group of people, what have we built here? Because it's fundamentally important to understand a few key issues that you have, for example, here in the UAE, when you're trying to purchase your home. First of all, generally speaking, we have around 80 to 85% of the people here in the UAE, especially in Dubai, that are renting their primary residence. That means that from that club of people, the rest, the 15% only, is actually acquiring their primary residence. What does that cause in terms of problems? It causes an unstable real estate market because it's highly investment driven by landlords that are looking to exploit their properties to tenants. It is causing, or at least it's not bringing a lot of economic stability, especially in regions where we're looking at a very highly expat driven nature. It is not too attractive to stay somewhere if you do not have your primary residence owned, right? If you're renting, you're a lot more movable. And a lot of people actually move. They choose not to establish a family here. They choose not to create a business. And especially regions like this, where currently we're migrating from tourism a lot to generating an actual GDP that also consists out of business, locally produced business, local trade, but also foreign trade afterward. It's driven by people actually creating their home bases here, meaning that there's a huge opportunity. And it even became an agenda point for the UAE government to bring back that rental nature of the market and make it more ownership based. So that was one of the drivers for us to start looking at what tech solution can we build, or what solution in general, because tech is an important portion, but there's also a lot of need for liquidity, obviously, that can actually help them solve that issue. And that basically brought us to that first model of rent to own, where we have, or where we are. It's not built yet, obviously. We're still in a lot of research processes, MVP processes, but where we have essentially created a micro ecosystem where all the stakeholders come together in one system, meaning that a landlord, so let's say in the sake of easiness, it's us that is providing or aspiring homeowner with a home. We obviously look to rent out the property to someone. The homeowner at that point can take that particular tenancy contract from us here in the UAE that goes already through the government, and it's actually already on chain. It's called an Ajari. And basically what we do is that we register that contract on chain, meaning that the moment that we create that initial layer of engagement with a tenant, with a client for us, so to say, it is actually created in a way that it cannot be modified, it cannot be frauded across the journey, which is generally around 3 to 4 years before someone is able to then acquire his home. So what happens? The tenant actually goes into a contract with us. He can get the keys for his house, starts living in the house, and starts paying rent. So every month that rent is paid, which is also all being done by the infrastructure that we are building, it is actually automatically reserving anywhere from 10 to 25% of their monthly rental payment into an on-chain escrow, basically into an on-chain wallet, which is piling up and saving up cash every single month. At the same time, each and every month that a tenant pays on time, we register that as a positive remark on their on-chain credit score. So we're basically also building an on-chain credit score module. What is the benefit there? Today, in pretty much no country around the globe, your rental payments, your private rental payments to a landlord, which is generally speaking the biggest expense that someone has, is actually being registered in terms of your credit score, in your credit score. It doesn't show that. So we give people the opportunity to take their biggest expense and to turn that into a positive record-keeping activity in terms of their credit score, which is highly important for the stakeholders that you can find here, namely the mortgage provider and the credit bureau that are obviously consulting with each other prior to handing you over a loan. So this is, generally speaking, a lot of manual interactions, people talking with each other when it comes to that whole mortgage approval process, right? Now, this becomes a wholly automated operation, pretty much by smart contracts, where after 3 years, when the aspiring homeowner has built up enough reservations in its basically on-chain escrow wallet, the mortgage broker or the mortgage providing bank now automatically sees that data on chain, sees, okay, this person now qualifies as per the income information and the savings that he or she has in that on-chain escrow, as well as a sufficient credit score that has been both pulled from the credit bureau, as well as substantiated by the 3-4 years of on-chain credit data that we have, to then automatically create that whole closure process of the aspiring homeowner purchasing the property from us as a landlord to take that as his primary residence, where basically, and this involves the last stakeholder, the land registry is being informed about that transaction, and where the transaction in a future stage can actually be fully automatically processed without human interaction. Dubai and the whole UAE, by the way, is quite far ahead when it comes to their government system. The government system, the land registry, is already on chain. So that was for us a major decision making in choosing where to exploit that business model and to pitch this concept actually also in collaboration with the government, because not only does it tap into their agenda of establishing their home ownership amongst their residents, but where it's also providing them with the actual underlying data infrastructure and transfers of data in terms of title deeds, for example, when it comes to the underlying registration system. So this gives you a brief idea of the initial concept of rent to own for people that don't qualify for a mortgage, but who also don't look to pay sky high rents here in Dubai and basically piss it all away to their landlords, right? This gives them the opportunity to actually take that and basically benefit themselves in a whole lot of ways, from a credit score perspective to savings to actually eventually acquiring their residency or the actual home. So this is general concept explanation there. The second group of people is actually also really important and interesting. That's the people that actually qualify for a mortgage. So they have a sufficient credit score. They have an actual income that is sufficient to pay off the monthly payments, but they simply don't have the money saved up, or they cannot rely on friends or family to pay that 20% down, which is the minimum down payment here required by law for a mortgage. In the Netherlands, that's, I believe, now 10 or 15, or at least in many places in Europe. But this is, generally speaking, a very interesting group of people. And there we come up with the solution of financing their down payment. So we're basically providing them with a secondary loan that they can then use to pay their down payment for their mortgage, which is then anywhere in the range of 10 to 25 years, basically paid back in terms of interest and principal, but which gives them the opportunity to acquire that home today for a minimal fee. So basically this gives, again, the technology and the different stakeholders a really solidified purpose. Why? Because we can remove a whole lot of the generally expensive administrative processes. We can make it fully transparent as well as protected for fraud. And at the same time, we create, again, that on-chain credit score that we can build at the site for that particular client as well, which means that it sets him up in many different cases in a very positive manner, because everything that you do in terms of credit obviously runs through the credit bureau. So here we have the two directions in terms of what we are building currently to accelerate home ownership and to actually create a solution for people that don't qualify today, which is a vast majority, I would say, here, but everywhere. I think this is a global opportunity that we're seeing now. Highly successful, by the way, in the United States already. So this is, I think, the general concept description. The benefits that you have here is that you are able to improve your credit score. You're less receptive to mortgage fraud. We have alignment with government goals. We increase the home ownership rates. We create or contribute to a more stable housing market, and we create more equal opportunities at obtaining home ownership in the first place. So this is a really big opportunity. It's the second vertical that will be launched on the Propchain as an ecosystem this year. So stay tuned for that, guys. The recap of the past achievements then. We have obviously launched prop.com, which was a great milestone after all. We have generated over 1,000 app downloads today with zero marketing effort. So that's a really interesting metric to witness. We have seen over 30% holder growth. We have crossed 5,500 holders, which is great. I think that we have seen a great rising curve, which is a reward, I believe, for all of the work that has been done. We have over 2.5 million social impressions in the last 4 weeks alone, which is great as well. It shows the ascending line that we have seen for the past half a year or so, which is a great reward for the marketing efforts of Propchain as an ecosystem. Significant community growth all across the board. We have further expansion of our KOL network. We have, I believe, officially crossed 100+ ambassadors right now, which is great, and which we also see, I think, in terms of the reflection in social impressions. And it's great to see the strategy work out. We have over 15 million tokens burned. We have an on-chain launch that is commenced now, or has commenced at present, and we have the token integration of Propchain that officially commenced now as well. So a lot of great achievements over the past few months here in the ecosystem and the underlying products. Well, what's next on the Propchain ecosystem side? First of all, the new centralized exchange listings. We actually have 3 in the pipe, and we may have 1 more bonus listing coming up. Hopefully by next week we will be able to confirm on this, and then we'll also kick off with our announcement strategy on the centralized exchange listing, so stay tuned. We have the light paper publication with a bit of luck before the month ends. Yeah, this is fully related to the ecosystem itself, the domains where we're active in, what we're actually building in terms of the tech, what is the difference between Propchain and all of those verticals and solutions that we're working on. Why are we taking that approach? How is the token integrated in all of that? So I think a really, really extensive explainer for each and every one of you, where a lot of work has been going into. Partnership announcements, further partnership announcements. We have a few lined up that have been concrete enough now and that are being signed for actual publication. So we're excited about that. We've taken a very big approach on partnerships and co-builds, grants that we're looking to provide, investments that we're looking to do to further leverage on the communities and strength of teams that are already existent, rather than trying to reinvent the wheel. The institutional tokenization pilot that is coming up, which is a quite significant one. Second product vertical presentation. I gave you a short introduction, but this becomes more concrete now, obviously. Further events and exposure. We'll be presenting our event calendar. So where will we be visible? Where we'll be present over 2024? We have some great exposure coming up again with local news sources, magazines that are featuring me and the companies that we operate. So a lot of eyeballs here locally again. Currently working on a massive ecosystem funding as well. So for the Propchain side, more about that shortly. Several press publications, as I just mentioned, and the visual changes of prop.com that are being integrated over the course of Q1. So very exciting times ahead. So that was the general update, guys. I saw quite a few questions coming in here, so I am going to try and answer as many of them as possible here. Let me see where we have them. I see a question related to Get Stake. Got a lot of momentum. Is they putting up new properties nearly every week? Is that also an objective for prop.com? I think the objectives have been shared. And if that's going to be a property every week, or if it's going to be a property every day or every month or every quarter, I think that is not necessarily too relevant for us. I think that for the first year, hitting our volumes and hitting our revenue targets is where it's all about. And at the same time, obviously, keep on delivering on a really good product. I think something we have been able to do till date, and it's something that we keep on or will which we will keep on doing, obviously. So that's our main target. The seed round for Prop.com was announced on December the 29th. What specific goals has the company set with the attraction of funds from the seed round, and how is it planned to allocate the funds raised in the seed round? How will this impact the development of products, or will it affect the community and investors? So what funds are still lacking for implementation? How much money did you plan to raise? So as I shared already, for this year on Prop.com specifically, we're looking to raise $3 million. It's something that we have specifically chosen to do because right now, obviously, we work a lot on the basis of the ecosystem funding. But simply said, we have preached always that we want hybrid funding methods. So for the ecosystem, we want it to be mainly token-based. And for the product verticals, we want this to be traditionally funded. Why? Because we think that that's the way how we're going to bridge the gap between Web 2 and Web 3, as well as offline real estate investing, obviously, but generally speaking, taking the best of both worlds. So I think in the presentation, I've already shared where that is going to be utilized for and what we're looking to do with it. But that's generally the direction that we're looking to head. What are the long-term project plans? How many years is development planned for? I think you've seen 5 years on Prop.com. On Propchain, we're about to present this over a similar period of time. How does Propchain plan to ensure regulatory compliance across multiple jurisdictions? Given the global nature of blockchain technology, can you share some ideas about strategies in this regard? Yeah, definitely I can. I think that what I said already, what is really important to us is the collaboration and the collaborative nature of how we are planning to approach regulators and how we are approaching them as we speak. As I mentioned previously, I think the success factor here really lays in collaboration with them and crafting the right regulation, crafting the right direction where possible. I think it's very important to understand that in general, we are working here on very outdated regulatory frameworks. I mean, they are definitely not prepared for the multitude of direction and solutions that have been created by tokenization. So this is how we go about it with the space, with the different companies. I think we should have a very collaborative nature rather than competitive. We should work together on getting things done. And that's obviously also the statement that we're looking to make as Propchain, as an ecosystem, where we're not looking to compete with other ecosystems or projects, but where we rather look to collaborate, to have them utilize our solutions, to run on our infrastructure, to be funded by us. That's how we build. That's how we grow. This space is humongous. Many of you probably don't even realize how big this actually is. You're talking trillions and trillions of dollars of potential market that can be tokenized, that will be tokenized more than likely, as how the direction goes now. So it is really fundamental to understand that this is not about competition. And the same goes for things like Prop.com. Yes, okay, we have a Get Stake, we have tons of other crowdfunding platforms that are offering you this fractionalized real estate investing, but that's not what we are. We are not just another real estate crowdfunding platform. We're underpinning this technology to bring a product to the market that digitizes the whole experience. So also the leverage side, the liquidity side, the lending side, the borrowing side. This is very fundamental to understand, next to the fact that the product verticals that we build not only solve a problem and can operate as a profitable business, but at the same time, it sets us up for proving regulators, proving other projects, proving all of those preachers in this space that we are actually doing it. You know, we show that things get done. We show that we take the initial approach. We take that first mover advantage. So I think that that's really fundamental to understand here. Everything we do, everything we build is not from a competitive position. Yet I would love the volume of crowdfunding platform A and crowdfunding platform C and whatsoever, but I rather work together with them and bring them the technology that we're building at Propchain, because left, right, or center, it comes down to the same thing. It's overall success of the ecosystem, and maybe further down the line, we acquire them or we merge or whatever. There's so many opportunities and directions to go. So it's really key to understand here. How does Propchain plan to stay ahead of the competition? That's something that I think is, that's kind of answering itself now with this answer I just gave. So what happens if you don't sell out on the listings within the timeline? So first of all, we always have an extension period of maximum 30 days. And if that doesn't happen, we can either decide to take it back to the investors, or we can say that in collaboration or in a vote, for example, we can extend it as long as we want to, as long as the investors approve to stay in. But that's obviously not the target. Right now, it is mainly being justified by how I started this presentation in terms of the hurdles, but that's obviously not something that we're planning to keep on doing, because then our business model doesn't make sense and our marketing efforts don't make sense. Can RWA tokenization projects like Propchain be compliant without a license? Yeah, they can. They can, definitely. I mean, you can be exempted. It's just all about the skill and the things that you're looking to do. And there's a whole wide variation of what you can actually do. So this is always something to consider. Propchain token should be released in AVAX blockchain or its subnets. Already, AVAX is the home to major RWA tokenization plans, starting with JP Morgan's, Onyx, and Citibank. Many RWAs plan to tokenize using AVAX subnets, and any plan for Propchain in the future. So, to be very clear, I think you also see a whole lot of private infrastructure being exploited now, and that's something that obviously we're having kind of in our roadmap as well, right? To provide that infrastructure. I think it's merely about the collaboration that you do, and then you can look at where do I look to integrate in order to tap into further community. But I think it's core to focus on what you're building yourself and how you make that work, and if it actually makes sense to make that work. Why is the price dropping? Yeah, it's mainly because people sell more than that people buy. No, I mean, I think we see general market sentiment. So I think that we have seen interesting ranges. And to be very fair, I'm not such a huge follower of price. I'm a huge follower of long-term vision, sustainability, constantly improving and actually delivering upon the promises that we make as a project. And I think that's important. And I think everyone that is here for like a quick run or a quick buck that simply doesn't understand the opportunity here that is being created and where we are successfully delivering on for the past 3 years. I think it's really fundamental to understand where you're kind of buying into and what general space development we will see in the next few years, especially with all of the communication and news and clarification that we see around RWA, around tokenization. So that's where's the focus for us. I think that I'm not going, because there's a shit ton of questions here, but I'm not going to answer what has already been answered in the presentation. Let's see. When is Propchain preparing to move the properties on chain? That's actually something I answered as well. Why has Propchain not been listing in additional exchanges despite revealing a 4-month listing strategy? As per my calculations, we're now in the 2nd month, so I don't see where we are not following our plan, to be fair. I think that's pretty much it, actually. The rest has all been answered by the looks of it in the presentation. So great, guys. I think that this was a very informative one. It's absolutely great to have kicked off the year like this. I'm really excited to see you guys all back on a more frequent basis. There's a lot to talk about. There will be a lot to talk about, actually, especially in Q1 with all of the developments and the launches and so forth that come up. So I think that we should see each other on a bi-weekly basis again. And I'm very happy to tune in and to be here and answer your questions, provide you with the updates as what you're used from us. Hopefully next time with a bit more energy. But I think we have been surviving well for the past 1 hour and 20 minutes. So I'm going to have a good night of sleep. Thank you all for tuning in today. And we're looking forward for the next round of updates.